Hello everyone. Assalamu alaikum and shalom. Thank you for joining today's webinar. My name is Roy Frank and I work in the sales team at Refinitiv from a local office here in Israel. We wanted to host today's event not only because it is a historical milestone for both Israel and the UAE, but the accord directly aligns with our underlying principle here at Refinitiv to better connect financial markets. At Refinitiv, we redefine what data can do. We are present in over 190 countries, providing information, insights, and technology that drive innovation and performance. We enable more responsible, transparent, and connected financial markets. And we use our data, forward-thinking technology, and expertise to help our customers make sustainable investment decisions, mitigate risk, and generate performance. Now, I don't want to go into too much detail, as today is about this new partnership between the two nations. If anyone would like to learn more about Refinitiv and our solutions, myself and our local team in each country would be happy to speak to you. I just want to quickly cover a few housekeeping points. Note that the platform widgets can be tailored to your requirement, made bigger, smaller, or minimized, depending on your needs. If you have any questions throughout the event, whether it be about the topics or technical, please ask through our Q&A widget. I will now pass over to Matan, who will be moderating this event.
Thank you very much, Roy. It's a great honor facilitating this special webinar live from Tel Aviv, Dubai, and London following the establishment of Abraham Accords. We are very glad to see here such diversity of many attendees from both the UAE and Israel. Who could have imagined up until lately that we will be able to host you in such a special occasion? These are very interesting, unusual times for all of us. First of all, thanks to the signing of this historic peace agreement and the enormous potential it carries for both parties involved. Secondly, that's in general a strange period of time due to the third wave of coronavirus, which is being dealt very differently, I would say, by the two countries. While Israel is now facing complete lockdown, shutting off the entire economy in order to reduce the infection, the Emirates, typically characterized by a younger population, continues their business almost as usual, including restaurants and malls, which I could see by my own eyes last November when I visited in Dubai, of course, while taking the precautions needed. By the way, both countries are world leaders in vaccination rate of their residents. So given such uncertainty caused by the pandemic and recession, the Abraham Accords provide the region with important resource in absence now, which is some hope for new relationships between the peoples, hope for national collaborations between the governments, and hope for new business opportunities and environment between the firms and the industries of the UAE and Israel. However, where do those opportunities could be found? What are the potentials and challenges for businessmen from both sides? How does Israel deal with these geopolitical complexes? And how is the UAE getting prepared to the post-oil era within just a few decades? Along the upcoming hour, we will all address all of these topics and many more, together with our two distinguished guests, Khatijia Haq, who is Chief Economist and Head of Researches at Emirates NBD, one of the largest banks in the Middle East, owned by the government of Dubai, and John Medved, founder and CEO of Our Crowd, an Israeli investment platform in startups, early-age companies, and venture funds. So, Khatijia and John, thank you very much for joining us today. It's highly appreciated. Since our audience is more or less, I would say, half Emirate, half Israeli, I think it would be helpful if each of you take just a few minutes in order to quickly present the status of her hometown economy, the Israeli and the Emirate. What is its current status, advantages, challenges? And afterwards, I will, of course, address you with some additional questions. Some of them will come from our audience, attendees as well. By the way, in order to submit the questions, either to John or Khatijia, please feel free to use the chat section on our webinar platform. So with no further introductions, Khatijia Haq from Dubai, the stage is yours for a brief introduction of the Emirate economy. Khatijia.
Thank you very much, Matan, and thank you to everyone who's joined. I'm going to keep this as brief as possible so that we have more time for questions. Just to give you a quick overview for people in Israel who are not familiar with the UAE economy, yes, the GCC is largely oil-based, but actually the UAE is one of the most diversified economies in the region. Only about 30% of GDP comes from oil, and almost all of it is in Abu Dhabi. If we look at Dubai, it's a very, very diversified economy. About 80% of it is services. We're talking about financial services, wholesale, retail trade, construction, real estate, healthcare, logistics. These are all really have been the main engines of growth for Dubai over the last couple of decades. The issue, of course, with coronavirus is that that same reliance on services and openness has actually meant the economy has suffered tremendously because of the disruptions on coronavirus. So we've seen particularly sharp contractions in transport, logistics, in hospitality, transport, of course, including the airlines, but also in terms of consumer demand, which has affected the retail sector as well. I think a couple of things to bear in mind when you're looking at the UAE economy is that it is an incredibly open economy. Around 170% of GDP was the value of trade in 2019, but it's very low value added exports. So it's oil, petroleum products, base metals, and there's a lot of scope, and the strategy is very much shifted towards trying to add value to what the UAE produces and exports. So there is tremendous scope to move up the value chain into a whole country, very similar to Israel in terms of size, around 10 million people. The difference, of course, is that 80 to 90% of the population is expatriates. So they're not UAE nationals, primarily from Southeast Asia, but there's a very, very diverse population and also a very young population. And that's one of the reasons why the economy has been able to stay open even as coronavirus cases have picked up in the world. They have picked up here as well, but there's not a huge amount of high-risk people, and so they've been able to manage this. One further point to note is that in terms of the balance sheet, the country has a very strong balance sheet. There is a low level of public debt. There is a huge amount of reserves in the sovereign wealth funds. They're estimated at least $800 billion, which are available to invest outside the country. And that, I think, is one of the big opportunities for Israeli companies, is the desire for the UAE, both the public sector and private investors, to actually look for opportunities in high growth sectors in other countries. Now, before we talk about the areas of growth and potential opportunity, it's important to recognize that, the UAE economy was actually slowing before coronavirus hit. So GDP growth over 2018 and 19 was actually quite disappointing. It was less than 2%. And that was for several reasons. There was a tightening of fiscal policy, but also the introduction of VAT meant that the old model of simply building things and generating growth by attracting population, that model was no longer serving its purpose. And so the shift in strategy has very much been towards looking at different ways of boosting growth and diversifying the economy. It's no longer just simply investing in infrastructure, in physical infrastructure, because there is already a fantastic level of physical infrastructure here. The key now is to move up the value chain, look for areas of investment which are more high-tech, more sophisticated, and that's, I think, presents a tremendous opportunity for Israeli companies to access the market and to benefit from that desire to diversify. So when we look at specific sectors of partnership or areas where the countries could do well together, technology is very clearly at the top of the list. And this would include financial technology. This is something which the UAE has for the last several years been already investing quite heavily in. The UAE is already recognized within the GCC and the wider MENA region, excluding Israel, of course, as the largest fintech startup hub. There's been a huge amount of resources and support provided by the government for startups, particularly in the sector. The fact that there is such a big expatriate population also presents a range of opportunities. There's a huge amount of remittances, which traditionally have been quite expensive through normal banks. And so a lot of new companies are coming to the market with ways for people to move money faster and cheaper. Another area which over the last year in particular has gained a huge amount of profile is food security and agri-tech. And this is partly because the COVID crisis brought home just how vulnerable food supplies are, not just for the UAE, but for the wider GCC. 90% of the food that we consume is imported from somewhere else. And when planes stop flying and borders are closed, it really makes it very, very difficult to make sure that there is enough to feed the country. And so there really has been a push to produce more food locally, given the environment that requires quite a lot of investment in a lot of new technology in order to try and boost yields, grow different kinds of crops in new ways, but really for the UAE to become a global hub for food technology and innovation, and something which they really want to continue to invest in and grow over the next few years. And then, of course, clean energy. Despite this being an oil exporting country, there's been a huge amount of investment over the last decade in solar power, in wind power, in nuclear power even. And the strategy is really to reduce the amount of fossil fuels which are consumed within the country to generate power and free up more to export abroad. So there is a tremendous amount of progress that has already been made. And then finally, just to touch on what Matan has already mentioned, tourism, which over the last month, we have seen an absolute boom in tourism from Israel into Dubai in particular. And of course, it's been very welcome because the traditional markets for us, Southeast Asia, China, Europe, have all been on lockdown. And so the fact that we have seen an increase in the number of visitors from new markets like Israel has helped that sector in particular recover perhaps a little bit over the holiday season, although it remains to be seen how long they can sustain that, given the extended lockdowns in most of the major economies in the world. So I'm going to stop there, and we can obviously take questions later.
Okay, great. Thank you very much, Khadija, for this brief introduction of the Emirate economy. I now pass our virtual microphone to John Medved. Hey, John.
Hi there, Matan. How are you? It's good to be here with everybody, wherever you are in the world, and I'm delighted to be able to share with you some thoughts about Israel, but in particular about the startup nation part of our economy rather than a more general view. I really appreciated what we heard from Khatija just a little bit earlier. Look, Israel today is the startup nation. And if you look at the way that the World Economic Forum views us, they rate us number one in terms of growth of innovative companies and R&D expenditures and entrepreneurial culture and companies embracing disruptive ideas. This is rather remarkable on a global level for a country of about 9 million people. We are indeed the startup nation and continuing to actually get stronger. If you look at what happened this year in terms of money invested in the year of 2020, the year of COVID, in Israeli high-tech companies, you would, I think, anticipate that we would have been hit, because in Israel, about 90% of the capital that is invested in our startups comes from overseas. We are almost entirely dependent on overseas capital. And as you know, most investors, before they want to write you a multi-million-dollar check, they want to see you face to face. They want to break bread. They want to smell you, feel you. And that, of course, totally impossible in the year 2020. So most of us were expecting a very tough year indeed, and it didn't work out that way. It turns out that in Israel in 2020, there was over $10 billion invested in Israeli startups, up from about $8 billion and change in 2019, which was another record year. And you're looking at this chart, and the thing is simply growing and growing. Now, what's driving a lot of this is the fact that exits continue to be very, very strong. And in particular, exits that are directed towards today IPOs or SPACs have now joined this tech ecosystem in terms of creating real value. The Israeli tech ecosystem is broad-based. It starts with thousands of entrepreneurs who are at the heart of it. It's then supported by significant government activity in the area of incubators and accelerators, well over 100 of those. They're probably, this number is low. I think there are over 100 venture capital funds, depends how you define them. There are hundreds, last count close to 400 multinationals active in the Israeli tech ecosystem. There are then a bunch of private equity funds and venture growth funds that provide the money just before IPO. Then there are the tech units of the IDF, where many of these companies are essentially getting their inspiration in terms of technology and meeting their teams. There are thousands of angel investors, and all of this works together as really a well-oiled machine. Now you look at what's happened in terms of our exits, and you're seeing something which has really changed in terms of the dollar amounts. It used to be that in the startup nation, if you sold a company for $100 or $200 million, made the front page of the newspapers, everybody was excited. You got your picture with your team throwing money in the air. Today, if you send a press release out about $100 million acquisition or exit, nobody notices. It's simply not important. We're now in the billion-dollar category. We're living in the age of unicorns. Turns out that worldwide, there are about 600 of these unicorns defined as private companies with $1 billion or more valuation. Israel is approaching 10% of the world total of unicorns, depending upon how you identify them as simply Israeli founders living abroad or Israeli companies proper. There are between 40 and 60 of these Israeli unicorns. And of course, if they're worth $1 billion before they're public, they're worth much more. And we've seen in the last year some really spectacular IPOs and performance in Wall Street, companies like Lemonade, where we were very, very fortunate to be an early investor in InsurTech, peaked just a couple of days ago at about a $10 billion market cap on the exchanges. Companies like Fiverr, who are providing very, very interesting marketplaces for services also getting near the $10 billion mark, JFrog, and a whole bunch of others. The big daddy of them all, if you will, was a company called Mobileye, acquired just a couple of years ago by Intel for about $16 billion. Mobileye, of course, leads the world in collision avoidance systems. And what was remarkable about that acquisition was not just the price, the biggest acquisition of an Israeli tech company to date, but the fact that Intel made a decision not to pack up Mobileye and move it to Silicon Valley, but to move their Silicon Valley activity in this automotive space to Israel and to hire more people in Israel, build new buildings and headquarters. It turns out that Intel alone has invested over the last 2 decades north of $50 billion, $50 billion in Israel, both in these M&A activities and in investing in their overall activity there. Okay. Now, you add all of this to the activity that has happened as a result of the new Abraham Accords, and this is opening up huge opportunity for the two countries. In particular, we look at this from our perspective as historic as the dropping of the Iron Curtain was in Europe. Here we just dropped the Sand Curtain, bringing two entrepreneurial societies together who can do great things. And we expect, together with our partners in the Gulf, to be seeing literally billions of dollars of activity, bilateral activity between the UAE and Israel. And in order to do that, we've hired a country manager, Sabah Al-Banali, who is a spectacular entrepreneur and is opening up our crowd in the Gulf. And with those initial comments, I'm going to turn it back to you, Matan, for the rest of the session. Thank you.
Thank you very much, John, for the introduction. I appreciate you both kept it brief in order to allow us time for the upcoming conversation. So, Khadija, back to you. You know, Israelis always look for opportunities. And looking at the future of the Emirate economy, what shifts are being made right now in order to anticipate the era after the oil ends? I mean, we know that Dubai, for example, as you mentioned before, doesn't lean on oil at all, while Abu Dhabi, for example, is one of the main generators of oil, and its economy heavily leans on it. So how would you approach this question of the after oil era in the Emirates?
I think it's one which is probably the most important question which the Emirates has to answer, is where do we go in the post-oil era? And over the last few years, we've seen quite a lot of progress on diversification. Initially, it was focusing on making them the trade hub for the region and a trade hub for the world. And I think that this is something which actually is now a competitive advantage. So for Israeli businesses, what can the UAE offer? Well, it offers you a gateway to the rest of the GCC. It offers you a gateway to the East, because Israel primarily trades with the West. And the UAE actually trades with China and India. Those are the biggest oil and non-oil trading partners. And so there is already a very strong linkage in terms of physical trade, but also intellectual property, investment, etc. So that is, I think, a tremendous strength. And from the UAE's perspective, what they want, I talked earlier about moving up the value chain. Well, that's what Israel brings. It brings technology, it brings skills. And transferring that technology and skills to the UAE will then hopefully drive job creation. And that ultimately is what we want to see and what we need for growth. And what has been lacking over the last couple of years, even pre-COVID. We were not seeing the kind of growth in private sector jobs which was needed to attract new people to the Emirates and to grow the GDP. So what they've done, the government has done over the last year to 2 years, is they've introduced a number of new changes to make the UAE a more attractive destination for investors, including hopefully Israeli investors. And they've made it possible now for foreign investors to own 100% of a company onshore, which was something which didn't exist before. So you don't need a local partner. You can come in. There are a huge number of organizations and governments, commercial entities that will assist you with setting up a business. and helping you figure out how best to do it for your specific industry.
So speaking about that, bureaucracy in the UAE also seems quite simple, right? I've seen the country was ranked 16th by the World Bank regarding the ease of doing business, which is also highly promising for outside investors.
Yeah, I mean, look, those rankings, I never put a huge amount of stock by them. But I think relative to other countries in the region, it's relatively easy to get a license. You do need a license for almost anything, but it's not difficult to get them. You can start quite quickly. And again, the changes to the regulations are making it easier, in fact. So you don't necessarily need a physical office now to do business here, which was the case before. The free zones as well allow you to be situated in a hub for similar industries and similar businesses. That means you can benefit from being among peers. So I think they have certainly made efforts even on the visa front to make it easier for people to get longer term visas, investment visas, and all of these I think are ways to try and make the UAE more attractive for foreign investment.
You mentioned that the UAE is the gateway for the East. I mean, from Israel's perspective, do you also see it as a gateway to the Arab world, which the commercial relationship Israel has with has been limited so far? Maybe it's an opportunity to enlarge the commercial business with Arab capitals and countries which the UAE is attached with?
Yeah, absolutely. So, I mean, the GCC, the Gulf Cooperation Council, is technically a customs union. So you can move quite easily goods, at least in the pre-COVID era, between countries in the region. So if you're based in the UAE, it's relatively easy to access the Saudi market and other GCC markets as well. But in addition to that, there's quite a nice and quite strong linkages to Africa as well. So it's not just the East. That is certainly the biggest market for us, but there's a huge amount of intra-regional, intra-GCC trade, and also then trade with Africa as well. So what we've seen is a lot of goods will come from China and India. They will be repackaged or divvied up in some way in the UAE and then shipped on to various destinations in Africa on a sort of a just-in-time basis. It seems to be a lot quicker to do it that way than to go directly. So, there's certainly a lot of opportunity to benefit from that.
Yeah, so let me take it from here to John. Is it just a one-way track, in which Emirates rich firms will invest in Israeli startups like you do, for example, or also expected to be a vice versa when Israeli businessmen purchase UAE companies and become the owners? What do you estimate is going to happen?
Look, I think that there will be all of the above and more. I think that the ability to start working really closely with UAE partners is what's going to drive this relationship. I think it's important to note that we're early days, right? And typically in Israel, we're very impatient. It's always what's going to happen this week, what's happening next month. For Israelis, a long-term plan is, a month away, right? In other words, we simply don't have a lot of patience. And that's a good thing in some ways. I think we have to adapt to a much longer-term view, especially when we're talking about, our partnership with the UAE going forward. Look, there's no question that we're moving very fast, but we're building a foundation for the future. And part of that future for us is investing in the UAE. I want to echo what Khatija said about the ease of doing business. We're in the process of registration there. We've already hired people. We're doing business in the UAE, and I've never found an easier place with a more helpful government and more helpful agencies who are really assisting us in terms of our future plans. And our plans include not just bringing
many people claim that this is just a temporary trend, namely a hype caused by a lot of media coverage to the Abraham Accords themselves. Do you see it that way, or maybe there is a deeper process, like you say, for the long term, based on the real necessity of business? For which term do you see it happening?
I think that anybody who thinks this is a hype and not real long term is somebody who's never looked at a map. Look at a map. See where we locate ourselves in the middle of the world. Realize that we are part of this hub, which is between Silicon Beach in Tel Aviv and Silicon Beach, which is in Dubai. And that now that that sand curtain is down, we're working together. Everything that we've mentioned here about access to Asia and the South Asia in particular, Africa, the ability to build things together. I think Katya pointed out three really important sectors: food security, fintech, and renewable energy. But there are about 10 others that we're working on already with UAE partners, ranging from logistics to mobility, to drones, to healthcare, to edtech, to everything being driven by artificial intelligence. And we believe that there will literally be tens of billions of dollars of activity. And don't just take my word for it. Look at the way that the leading partners around the world, trade partners of Israel and the UAE, are relating to this, such as Germany and Japan. They are incredibly interested, trying to figure out how do they play this, because everybody understands that this is unlocking huge potential value. And yes, there is a lot of hype surrounding this agreement, but it's underhyped. I don't think people understand how fundamental and long-term and game-changing this change is.
So maybe you can say a few words also about the business climate, the temper of people in the two countries. I mean, as an Israeli who knows the UAE, do you predict any challenges or sensitivities in terms of communication between the parties involved, even socially? I'm asking about the environment rather than the pure economic side now.
Look, I think that right now the vibe, the environment is extraordinarily positive. Okay, it really feels like you've met a part of your family who you were artificially cut off from. I don't remember feeling the kind of warmth and the hospitality. Now, of course, you know, in the Arab world, hospitality is important, but we have been made to feel incredibly welcome. And obviously, there are different cultural things. Israelis are not famous for tact and politeness. That's not our strong suit. We're much more direct, much more sort of in your face. And that can be difficult because I think that sometimes we don't get the nuances. Sometimes we're a little too pushy. And we, again, have to sort of pull ourselves backward. But the people I've met in the UAE are in this for the long run, and they're not fragile, and they're not going to be, you know, irrevocably insulted by an Israeli making a faux pas or a mistake, or you know. But the reality is that, you know, I think that it was Mohammed Alabar, the guy who built the Burj, very big businessman in the area. He described the difference, saying, "Look, when I want to do business with somebody, I ask them to come meet my mother, and I want to meet their mother." I think that the way I am understanding the business climate there is that they are in this for the long run. They want to be focused on relationship building rather than initial transactions. But I think that they're moving quickly. And what's remarkable is how quickly both sides are moving. We've already signed a $100 million deal, and that's just the start for us.
Okay, so Khadija, we've been talking a bit about bureaucracy, but let's go to the taxation system in the UAE, which works very differently than in the West, given the zero income tax methodology. What do you have to pay, and what don't you have to pay doing business?
Okay, so there is no income tax, there is no corporate tax in the UAE at the moment. Of course, I have to caveat everything by saying this could change at any time. But from our perspective, there's no indication that that's going to change anytime soon. The government raises a huge chunk of its revenue from oil sales, but also a huge amount of revenue comes from fees. And administrative charges. So every time you need to get something done, you may need to get some documents, you may need to get some licenses, and all of that comes with fees, you know, getting your visas processed, etc. And so that's really how the government generates its income. So certainly it's a different model. And that's one of the reasons why when COVID hit, we saw most governments around the world inject quite a lot of fiscal support in the form of furlough schemes or wage subsidies or cash in hand to households, effectively giving back tax that had been paid in previous years. In the UAE, the focus was very much on just simply making sure that there was liquidity in the system for the banks and providing some relief in terms of reductions of fees and, you know, holiday, on certain charges. But there wasn't that same amount of injection of fiscal support because they don't collect taxes. And so there's nothing really to give back. So it is a very different model. But in some ways, you know, that's what makes it an easy, a nice place to do business. You don't have to worry about taxes and things like that. Of course, there is a value-added tax, which everyone has to pay, but that's it's a consumption tax rather than a corporate one.
Yeah, well, from the foreign currency side, the UAE has a fixed rate regime of the dirham versus the American dollar. How is it being managed, and how does it affect the international trade of the Emirates, Khadija?
So it works really well because it's an anchor for the economy. Everybody knows what the exchange rate is going to be in 5, 6, 7, 10 years' time. At various times, there's always discussion about whether the peg will go, especially when oil prices fall. But historically, they've withstood quite a lot of pressure, on the currency peg, and it has held. And given the size of the sovereign wealth and the size of the reserves that the government has access to, if they do decide to move away from a fixed currency peg, that's a policy decision that they will have made, having thought about all the implications. It's not a change that is likely to be forced on them because of a balance of payment shock or because of a market pressure. So I think from that perspective, it's something which you can reasonably expect to remain in place for the foreseeable future. And it does, again, make it easy to do planning. Because don't forget, all of the other currencies in the GCC, except for Kuwait, are also pegged to the dollar. So you already know, whether you're trading with Saudi, with Oman, with Kuwait, you know exactly what the exchange rate is going to be. So it does remove some of that uncertainty and volatility.
John, before we discuss, before we open up this discussion for the entire audience, I would like to ask you, John, about the geopolitical side here. I mean, Joe Biden will become president this week. The negotiations with Iran are likely to resume. The Israeli-Palestinian conflict is, after all, here to stay. Will the economy be able to ignore such issues between Israel and the Arab world over time and still stick the parties to each other? Can they overcome obstacles at the political arena, in your opinion?
That's a great question, Matan, and I believe actually that geopolitics is an accelerant to the business ties. I mean, let's face it, the reason that we're having this business discussion is because the politicians and the leaders of these countries decided it was time. And the reason that they decided were partly economic, a lot economic, but very, very much driven by regional realities. And you don't have to be a rocket scientist to understand that Israel and the UAE and many other nations in the GCC now have very strong common geopolitical interests vis-a-vis Iran and vis-a-vis the world. And I think that people basically said, wait a minute, there's much more to be gained by working together, by doing business together, by opening up, than by maintaining an unusual state of abnormality. So, it's interesting when I'm in the UAE, people don't talk about this as a peace treaty. They mention quite clearly that we were never at war with Israel. Israel and the UAE never fought each other. This is simply making a normal relationship where an abnormal one existed before. Now, I think that the logic does not change with a change of administration in the U.S. I expect that this geopolitical alignment, which aids the business environment, will continue to get only stronger as we go forward. And I believe very much that the 4 countries who have joined the Abraham Accords are only the beginning, and that you will see over the next several years many more countries, some of them even bigger and some of them even more important regionally, join in this accord and make it stronger yet.
Okay, so we are starting to get questions from the audience. And John, I'd like to stay with you because there is an embarrassing question that we must address. Someone from the Emirates asked, how large is the share of the Israeli binary option companies in the UAE? There were some recent publication about that in the US media. They, of course, refer to those binary options companies operating from Israel, selling their so-called products worldwide, with an emphasis on the Arab world. How do you address it? To what extent are you familiar with this phenomenon?
I mean, look, the reality is that Israel is very strong in every aspect of the digital economy. Okay, if it's digital, you're going to find Israel there in a leadership role. Some parts of the digital economy, let's face it, are ugly. Not everything is beautiful, right? Most e-commerce is great. We love Amazon, we love Fiverr, we love things like that. Most cybersecurity is great. But when you talk about things like binary options or even online gambling, yes, Israel has a strong position, which is an embarrassment to me personally. And I'm glad that Israeli regulators have been trying to crack down on this. Certainly the US is, and I hope that everybody around the world basically moves to put the bad actors out of business and make life hard for them. But the reality is that most of our activity with the UAE, and by the way, it's not like we just started now. The UAE and Israel have been doing business for decades. Many of the people we're doing business with, this is not their first rodeo. But what happened is that you used to have to really, do all kinds of strange, gymnastics to either get to the UAE. The travel was hard. The issues of whether you could be public about your business was difficult. But now it's all open. So I'm convinced that in the digital economy, most of the activity is going to be the good stuff. The bad stuff, hopefully, we'll let the regulators go after them.
Yeah. Khadija, the next question from the audience is for you. How banks and financial institutions inside the Emirates are embracing this UAE-Israel peace deal? Are they willing to allocate resources? Are they willing to get into investments? Do they see it as a positive opportunity, or some of them are still conservative, hesitant whether to allocate financial resources in order to allow such collaboration to take place? Khadija.
I think they're very excited, they're very keen, and certainly banks were some of the first to step up and actually normalize relationships with Israeli banks. We had, I think, the first SWIFT transaction with Emirates MBD and Bank Leumi just a few days after the Accords, the Abraham Accords were signed. So banks are, as always, very keen to investigate and get involved with potentially growing their businesses in different markets. I think the issue for most of the local banks is just one of understanding and one of, how do we measure the risk for an economy that we don't really know or understand? So I think there is appetite, but it's just a question of getting to a certain comfort level before they are willing to really perhaps allocate significant capital. But certainly
so
there is
at the
great
macroeconomic level, like one of our attendees asked, at the macroeconomic level, do you anticipate a more dynamic capital market, including large numbers of M&A, mergers and acquisitions activities in the Middle East, thanks to this last movement?
Yeah, I think there's absolutely potential for that. Again, you know, there are a lot of UAE businesses that want to grow and perhaps feel like they have exhausted the local market and they are looking for new markets to expand into. Egypt is one which over the last few years has seen a huge amount of investment from the UAE in particular into different sectors where companies are saying we actually need to grow and this market makes sense for us. So I absolutely see that there's potential, but I think it'll vary from sector to sector as to whether it makes sense for companies to merge. You know, from the financial market side, I have to say I would think the Israeli financial markets are probably a lot more developed, probably a lot more liquid as well than the UAE, and that's something which hopefully you know, can also improve and develop over time.
Yeah, so a related question to that would be if the UAE stock market is open for Israelis, how developed is the market and what kind of companies trade there? Are there many IPOs, for example, which is a good indication to see how much liquidity and how much interest you can attract to the capital market?
Yeah, so it is absolutely open for Israeli and other foreign investors. There are certain limits on ownership for some listed companies, but it depends on the company as to what their foreign ownership limit is. And I think the issue around IPOs, it comes back to what I did mention, that there is not a huge amount of liquidity. Part of the reason for that is that the regulation states, and this is something which, you know, the UAE regulators need to take a look at, but it's not always an attractive prospect for smaller businesses, for example, to look at IPOing, and I, you know, hopefully over time they will start to align the regulations a bit more to hopefully attract more capital and build up the liquidity in the market. But at the moment, the main companies that are listed on the stock exchanges here are really banks, real estate companies, some other financial services, insurance, etc. But we don't have, for example, you know, the airlines are not listed. A lot of the big hotel chains are not listed. And I think that comes down to, you know, government ownership of certain sectors of the economy. And unless they choose to privatize, it's very difficult to see how you're going to end up with those kinds of stocks listed on the stock exchange.
Okay, so let's focus on the private sector, and I'd like to ask you, John, about the high-tech sector in Dubai and in the Emirates in general. You probably know that Dubai has its own startup scene with highly invested incubators. The UAE also initiates international exhibitions at that field. How can the two countries collaborate at this particular strategic field of high-tech in which you're a great expert? I mean, would you recommend an Israeli startup to offer its shares at the Dubai Stock Exchange? Or maybe there is another way to go in order to establish a startup activity there?
See, I really think this is a case of classic synergy, where 1 + 1 does not equal 2 or even 3, but it's sort of logarithmic mathematics. It equals 11, because you put these two together and all of a sudden we have critical mass and we can be a world center. And I think the ability to work together with our capital markets, it's really, by the way, very, very dramatic and hasn't gotten enough coverage, the recent developments in the Tel Aviv Stock Exchange. Let's face it, Israel's startup scene was way ahead of our stock market for the last decade. And then about a year ago, the Tel Aviv Stock Exchange privatized, brought in external investors, and it's gone wild. There are so many IPOs going on in Tel Aviv. I understand at the moment that the line to get public is about 100 companies long, with just endless IPO activity. And I think that's going to be attractive to Emirati investors big time, because people are doing well with these. But in addition to that, I think that there's going to be spillover in terms of how we work together, in the capital markets. Now, remember, Israel's primary capital market is not Tel Aviv, it's New York. Okay, we take our biggest and most successful companies directly public in the major leagues in New York. And I hope that there will be many, many joint ventures, companies that are doing, work together. And for example, our interests in the area are not just investing passively or bringing money to Israeli companies, but to do things on the ground. We are going to be hiring lots of Emiratis and expats in the Emirates to do all kinds of work. We are facilitating literally dozens of our companies. We have a portfolio now of about 250 tech startups, and we have dozens of companies that are engaged in different kinds of discussions and negotiations and have actually begun to sign deals. Some are being publicized, others not, with Emirati partners. And this is going to be very, very big. So if you're a capital markets person...
So you practically agree, John, you practically agree with Khadija that the UAE is not necessarily a final destination. It's also a gateway to approach the entire markets outside of it, the American market, of course, the Eastern market, the Arab world, and then you can take it from there and scale up the entire startup scene.
Yeah, look, I think that just look at Dubai. Dubai is a city built on determination, really built on chutzpah. Okay, it wasn't built on oil, and it wasn't built on tradition. It was built by entrepreneurs, and I think that we don't give enough credit. We don't appreciate enough how entrepreneurial the UAE is. And I think when these two entrepreneurial DNAs that are related, we're family after all, but are different, and we come with different strengths, get together, the sum of the parts is far greater. I think that the UAE entrepreneurs understand scale, whether it's the biggest building in the world or how to build the biggest company leaders. And I think what's great, what I've seen in the last couple of days, which brings a smile to my face, is I'm looking at the world and how people are vaccinating. And you know who the three leading countries in the world at the moment who are vaccinating their people?
Yes, I know. It's Israel, the United Arab Emirates, and Bahrain, if I remember correctly.
Those are the three partners in the Abraham Accords. I mean, just realize how wonderful this is, that these children of Abraham are now not just working together in business, but we're leading the world in health and in getting out of this horrible plague and this pandemic. And I think this is something, when you talk about hype, we're not hyping this enough. People don't understand how huge this is for our region, for our countries, but really for the whole world.
Yeah, I can even testify on my own behalf that during November, when I visited in Dubai for the first time, I was amazed by, like you said, John, by the scale. I mean, everything is the biggest, the tallest, the widest. Also by the story of Dubai and Tel Aviv. Both started from a very low point, invested so much efforts and creativity in order to launch something bigger and better. And of course, since Dubai is so close to Israel now, because you can fly there within 3 hours due to the Abraham Accords, so it is likely to become a very, very popular destination for the Israeli audience. I think many tourists would be love to see such a prospering Muslim country. Most of them haven't been to a Muslim country before, and now seeing the and the enormous success of the Emirates for the first time, I mean, it's a very unique experience. So I'm sure Dubai is going to get a constant stream of Israeli tourists right after the COVID-19 ends and the lockdown is behind us. I would like to address you, Khadija, one more time in order to wrap it up. Maybe what do you think should the two parties be focused at during the upcoming years, and how do you ideally see the relationship between the countries? What can any of them bring to the table in order to maximize the mutual welfare and the mutual potential of the new beginning between those two countries?
I think John's actually covered everything extremely comprehensively in terms of how well potentially the two countries can work together for both of them to benefit, giving what they can bring to the table, being quite complementary. And I would say that as much as you mentioned that Israeli tourists would be very keen to visit Dubai, I suspect it's the same going the other way. And certainly, there's a huge pent-up interest for tourists from the region, from the UAE, to come to Israel as well. So I think that can only help in terms of developing relationships, not just at a national level, but on a much smaller scale and more individual scale as well. And that can only ultimately be a good thing for people to actually know, people in other countries and understand the culture and hopefully realize that, we're not all that different after all.
Well said. Well
Amen.
said.
So at this point, I would like to thank both of you, Khadija and John, for joining us today. That was a very inspiring talk for me, and I'm sure each of the attendees has lots of takeaways to understand and to study in order for this collaboration to fulfill its giant potential. So thank you very much to the both of you. And Rui, I pass you the microphone to wrap up and finish this discussion. Thank you all.
Thank you, Matan. Thanks for moderating this session, and really big thank you for our distinguished speakers, John and Khadija. It was wonderful to hear your insights about this historical agreement. And finally, thank you, our crowd, our customers, for joining us. We hope you find this interesting. And my final request is to please answer the feedback you will receive at the end of this webinar. It was great to have you with us, and I wish you a great rest of the day. Bye-bye.